Hello everyone, welcome back to Fundrise Finance. So we are halfway through 2024 and the S&P 500 is 14.48% year to date. That's like an amazing start to the year, but no matter what, it's a very good number so far and we're happy to take it. But we can't surely say that this good relative outperformance will continue through the rest of the year. But one thing is what we can say is as long as we continue to invest into quality stocks and ETFs, no matter what happens in the market, a good quality portfolio will stand the test of time. And on the side, it will keep on giving you quality dividends. That's what we'll discuss in this video today. How my portfolio did in the month of June, how much portfolio dividends did I earn. So without any further delay, let's check it out. So this is a portfolio in Fidelity. We can see the current balance is $118,556. The last 1 month, our portfolio was up 1.75% compared to S&P, returning 3.59%. Now, if you look at the last 1 month, right, you can see the whole market was pulled up by the big tech. Apple was up more than 10%. Broadcom here, you can see almost 16%. Nvidia is 7.5, Amazon is up 6, Microsoft up 4%, Tesla doing good at 12.31, Eli Lilly up 11.5. So yeah, like the top 10 of the market is just going blazing guns. You can see many of the sectors still in the negative zone. Looking at the dividends in this portfolio for the month of June, here we can see we got a bunch of payments. Like basically, the third month of the quarter is always my highest paying month. And so it starts at June 3rd, then we go all the way, almost like every day of the month, we get paid, even as low as 1 cent, all the way going through the end of the month. Now I downloaded all the transactions into an Excel sheet and we can go through these payments, starting with the Devo ETF paying us what $3.85, then Ford $1.83, Pinnacle West $3.14, Visa $1.09, WEC Energy $8.76, Johnson & Johnson $3.08. Zoetis, it's a new position in my portfolio. I just started into this, paying us like 12 cents. Then we have JP $22.20, then JEPQ $21.95, and Cummins $1.71, Amgen $3.42, Honeywell $3.28, Parker Hannifin $1.76, Sherwin-Williams 72 cents, then American Electric $2.81, Chevron $5.02, then we have Chevron $5.20, then Emerson Electric $1.62, Rockwell 67 cents, Target $2.25, Tractor Supply $1.12, Randall Basel $2.78, Applied Materials 80 cents, Home Depot $6.83, then Microsoft $3.79, Pfizer $3.03, Realty Income $4.73. Then we have two new additions to the portfolio, relatively speaking. Then we have S-Flow ETF 17 cents, then V-Flow ETF 16 cents. These both of them are cash flow based ETFs. Google $3.03, and that's the first payment from Google ever in the form of dividends. And Degro $6.42, Divvy $8.15 together, MACD $2.64, then we have Nextera $8.76, Whirlpool $3.66, L3 Harris $2.36, Qualcomm $1.73. Another new addition to the portfolio, this is the DUHP ETF, paying us 34 cents. Then we have Waste Management $1.25. Then we have FDVV ETF 41 cents. United Health $2.58. We have VYM $8.15. VIGI, the international version of WIG $2.72. And we have ABUV $4.88. ABUS $3.31. Then we have Meta paying us $1. This is the second payment of Meta this year. Then we have SPLG 15 cents. JQuA 90 cents. T. Rowe Price $2.56. Then we have DGRW ETF paying us 21 cents. Bank of America $3.11. CTO Realty $6.70. Devon Energy $1.62. Then we have DSTL ETF 33 cents. DSMC similarly the 27 cents. Then we have $70.14 from SPAXX. This is the money market fund and Fidelity that holds our cash. We have DIVI paying us what I would say $2.12. Then we have GRPM, another new addition, paying us 21 cents. SPGP $2.58, XMHU 45 cents, OMFL $3.26. Then Nvidia a whopping 30 cents. PepsiCo $3.40, and finally Union Pacific paying us $3.97. And this is the Google tracker that I maintain to track my portfolio. We can see here the portfolio value at $118,613. It's slightly higher than what we saw on the Fidelity website. That's due to the option values that keep making the numbers a little skewed here and there. But overall, it's I would say fairly close to the actual value. The dividend yield is 3.27% with the annual income of $3,881. So adding up all the dividend values that we saw earlier, the total comes down to be $277.53. That's our payments for the month of June, which is lesser than what we got paid in the month of March. The reason being the SCHD ETF, which for some reason this time decided to pay in the month of July than at end of June, as what it usually does. Now, SCHD declared its dividend the last week of June for a payment of just over 82 cents, making it the highest payment ever in its history. But as we can see here, the ex-dividend date was June 26th, but the payment date is July 1st. You can see here, usually in the month of June, it pays towards the end of the month. Like last year, it was on June 26th, the year before, it was June 27th. But this time, for some reason, they went slightly out of the usual and are paying us on July 1st. And we have 125 shares in our portfolio, which, if we look at our expected payments for the month of July, we see that SCHD over here expecting $102.61. So if this was paid to us as usual in the month of June, then we could have seen much better numbers than what we saw in March. But yeah, it is what it is. Looking at the quarterly dividends, you can see with the closure of Q2, we are currently at $736.90, which is better than the Q1 value by 23 bucks. So yeah, good to see that growth. Annually speaking, we are at $1,450 right now, and we are what more than three-fourth the bar that was for the entire 2023. So yeah, by end of 24, see, we hope to touch this 2000 number. Let's see what the next 6 months does. But as I usually say, this is my favorite chart of all, the dividends by quarter. Here we can see, even without the SCSD payment for June, we can see this Q2 value going higher than the Q1 value. So yeah, nice slanted upward growth. Looking again at the expected payments for the month of July, you can see the payments start first with ADP, then Coca-Cola, Nike, UGI, CGDV, and CGGR ETFs, and MGC, then SHD, as we just spoke about. Likewise, the CHG and CHY. Again, these are typical payers for the month of June, but for some reason, all of them are paying in month of July. Then VUG and VIG ETF. Typically, all of these are regular payers in the third month of the quarter, but this time I'm not sure why all of them decided just pay them in the month of July. Then we have VOO, Vici, Chubb, Merck, Philip Morris, Metal Properties, a small position of 100 shares on which I do test the options income. Amphenol, Altria Group, Best Buy, American Tower, Franklin Resources, Mondelez, Medtronic, Federal Realty Trust, IIPR, that's the industrial properties, Realty Income, US Bank Corp, WP Carey, Intuit, Comcast, Cisco, Salesforce, Disney, Oracle, EOG Resources, JP Morgan, Toronto Dominion, the triple Qs. Again, whole lot of bunch of payments. If we sum all of these, currently we see close to 279 bucks expected for the month of July, which is much better than what our payment was in the last first month of the quarter. That's April, when we had just had like 162 bucks. Yeah, most of it coming from the SCHD payments. Even if we had taken out that 102 bucks from SCHD, we would have seen close to what 100 and $75 payment, which would still do better than the April value. So yeah, the dividends are rolling in, they are getting bigger. That's what should start our Q3 value, the Q3 bar here in a nice way. Now looking at the overall portfolio, well, I used to maintain this chart when I had my M1 Finance, Acorns, and Stash portfolios. Like I had like 3 to 4 portfolios which I was tracking in one single overall sheet. I should condense my overall sheet and the affiliate sheet to one because I just now have one single portfolio to look at. But yeah, it is what it is right now. Yep, overall we can see the sector breakdown. ETFs are like 30.8% of the portfolio, followed by cash right now at 15.1. Then we have information technology at 11.9%, and financials at 7.5, then consumer staples at 5.4, then consumer discretionary is almost similar, like at 7.6, followed by staples at 5.4, then communications at 5.3. Remaining everything are like sub 5%. Now this sheet has a longer dividend growth history because of the additional portfolios I was maintaining here, starting all the way back in 2018 Q1 when I was like not focused on dividends at all. But whatever the small portfolio was, it was giving me like 50 cents or dollar of payments. Then slowly, by end of 2019 is where my focus started on the dividend side of the investing journey, and that's where we can see this value going higher. And this monthly dividends is what we can see from April 2022 is when I started to track my payments actually. So yeah, you can see the values going up and down based on the month of the quarter where I'm paid. Because we can see here the monthly dividend split. The third month of the quarter is what pays like what 59% of overall dividends, followed by the first month at 13.4, followed by each month because of the income ETFs that I hold, the JPs and the JEPQs and the DEVOs, like 16.6%, followed for the first month of the quarter at 13.4. Then we have second month paying us like 10.8%, followed by the semi-annuals, yeah, paying us 0.1%. Now these are what the things like Disney that pay semi-annual. Then we have the international ETF SCHY, yeah, something like that. Now the chart here to look at is the dividend income by sector. The ETFs pay us the highest, 1338 bucks, followed by financials at 330 bucks almost. Then we have consumer staples at 305 bucks almost rounded off. Then we have the real estate paying us $286. Looking at the portfolio value from the where I was tracking, we can see it going up nicely, slowly, higher and higher. And the equity style, our portfolio is large cap tilt, in which we have what 23.3 in growth. The blend has 25.8. The value is 39.1. So yeah, almost like what 80% of the portfolio is large cap. And look at the dividend income by assets. We see the highest is the individual equities. That's like 30% right now, followed by cash, which is like 23% of the income right now. As and when I use that cash position to invest into right opportunities, the other sectors get adjusted accordingly. And then we have ETF paying us 19.5%, the income ETFs paying us 15%. Then we have REITs at 11.9. Looking at a few income goals and metrics, we can see here the year-end goal was at 3,000 bucks, which we have already crossed way past it. The 5-year goal by end of 2025 was 3,500. Right now we are at 3,881. But like I said, when I deploy the cash accordingly, the dividend value will get adjusted. So I will not touch this number right now. Let's see as and when I deploy the cash position, how the numbers look like and stuff, and then go from there. Then other dividend metrics, we can see here our portfolio currently generates at a monthly value of 323 bucks. Weekly, it is $74. Daily, that's like the 7-day, $10.63. If it's a 24-hour, it's at 44 cents. But if it's like an 8-hour work day, that's like if our portfolio goes to work right now, it will earn $1.87. So yeah, that's the overall picture of the portfolio right now. Pretty happy with what it's doing. I have 15% cash position, which I would like to deploy into good positions as and when I see them. The market is right now overvalued. I'm expecting some correction in the near future, and if that gives me good investing opportunities, I'll latch on to them because buying quality companies or ETFs at good prices is what we want to do. We don't want to overpay for them. That's my basic investing principle. And yeah, that's all I had wanted to discuss in this video. Hope you all liked it and you found it valuable. And if so, I would really appreciate if you could hit that like and subscribe buttons so that YouTube can suggest this video to many more people out there, and that would really help this young channel. So yeah, until we meet the next one, please try as much as possible to be financially healthy and keep taking those small strides towards financial freedom. See ya.